Crypto markets entered the week under clear pressure. Bitcoin slipped below $95,000, reaching its lowest level in several months, as risk appetite faded and macro uncertainty grew. Ethereum held just above $3,100, reflecting broader weakness across large-cap digital assets while traders retreated from speculative risk. Market commentary described this week as a risk assessment phase rather than a rebound attempt. Expectations for a US rate cut in December were scaled back, and risk assets, including crypto, suffered as exposure was dialed down. ETF flows into crypto showed significant outflows, signaling that institutional participants are stepping to the sidelines for now. Internally, the market structure continued to show signs of stress. Funding rates remain near neutral, but open interest shrank and implied volatility remained elevated compared to recent weeks. With a significant block of options expiring soon, the market faces latent pressure even as visible movement stays muted. From a technical standpoint, key levels are now under focus. Bitcoin's support zone near $95,000 to $100,000 is critical. If it breaks, the next layer of support lies in the $80,000 to $90,000 range. Resistance around $105,000 held firm this week, indicating buyers remain sidelined. Ethereum mirrors the pattern, support near $3,000 to $3,500, while upside is capped until momentum returns. Altcoin rotation was cautious and selective. Larger infrastructure projects showed relative resilience, while smaller speculative tokens lagged noticeably. Meme coins and gaming tokens saw brief spikes, but liquidity dried soon after, demonstrating that speculation remains alive but muted. Derivatives markets underscored the mood of waiting. Option skews flattened and funding stayed low, consistent with a market in compression rather than expansion. These conditions often precede a breakout, but the direction remains uncertain until flows shift. Speculative Corner, for the degens among us. Even in a subdued week, a handful of small-cap tokens posted sharp intraday gains of 30 to 50%, driven by thin order books and fleeting attention. Funding spiked temporarily on some perpetual contracts, an indication that leveraged interests remain active where liquidity is cheapest. The core message: caution mode is engaged, but not capitulation. The market is defensive, trading in range, and waiting for a catalyst. Trend direction will depend on macro signals, institutional commitment, and whether Bitcoin holds its latest support band. Until then, patience remains the strategic edge. For more insights on Bitcoin, Ethereum, and the forces moving the crypto markets, remember to like, subscribe, and keep learning, here at Crypto in Black and White.